Good afternoon, everyone. It's a pleasure to be here with you doing a presentation on financial literacy. And while I'm putting up my screen, please forgive me trying to look for my screen. This is embarrassing, but financial literacy basically is, I think I'm getting my screen right now. It's basically, can you see the screen?
Yes, we can see it now, Drex.
All right. So what is financial literacy? Basically, is having the basic knowledge of managing your finances effectively. A lot of us may have a lot of money and still financially literate, if I could use that word. And some of us may have very little money and they're very smart in managing their finances. I mean, my mom didn't have much money growing up, but I felt that she was very good in managing her money. She was able to stretch her dollar. And the thing I want to stress here is that even though you may have this knowledge about financial literacy, if you don't apply it, then you're not financially literate. That's in any circumstances in life. You might have, knowledge, but if you're not applying it, it really doesn't make any sense. And that's where wisdom comes in. Some people have all the knowledge, but they didn't use anything with it. And so this is what we want to talk to you about. How do you use the knowledge and apply it so that you can be smart in managing your finances? The first thing you need to know is your worth. Okay, what are you worth? And some of you, if you document your worth, you may realize you're worth so more than what you think you are. A lot of us say, "Oh, I ain't got nothing. I'm not worth anything," and that's because we probably compare ourselves to a lot of people. But if you were to document, your assets and your liabilities, you will realize that you're worth a lot. So, what are assets? You might hear this terminology. These are things that you own, such as a house. And these are it's mostly like things that will last for more than a year. Okay, we're not talking about the low basic stuff like groceries. That's not an asset. These are things that will last for more than a year, like a house, a car, cash, apartments, money you lend to people. Some of you probably have a lot of money outstanding you lend to some of your friends, and that's still your asset. And then you have liabilities. The liabilities are the money that you owe to individuals and companies. Some of you may have bank loans for your homes or your business. You may have a credit card. They are liabilities. So now what you need to do is document this. And if I were you too, the best thing for me, as young as you are, is for you to try and acquire as much assets as possible without any liability. Obviously, if you can afford a loan, then you should get the loan. But it's great if you could build up your financial worth. So when you get older, you have all this stuff that you could retire early and you could do a lot of stuff or reinvest. So let's give an example of your worth. Let's say now that your assets, let's say you have the following assets. You have a house, costs you $200,000. You have a car, that's $20,000. You have some cash in the bank, around $5,000. So you add all of them. You add them together, and you get $225,000 as assets. Now, your assets may even be worth more than that, to tell you the truth, because if you were to do a valuation of your house, you realize that the valuation of your house is worth more than what you paid for it. It may cost you $200,000, to build a house. But by the time you did all the upgrades and you put all the furniture and you paint your house and you do all these renovations, you may discover your house may be worth $250,000 or $300,000. So you're really worth more. Now let's say the liabilities now are the loans. Your loans are $150,000. So we have assets, which we just give an example of $225,000, and then you have the liabilities, which is $150,000. So you're worth $75,000, which is the difference between your assets and your liabilities. Now, obviously, if you didn't have that loan and you had, paid for these things cash, your worth will be higher. The lower your liability, the higher your worth. The liability is reducing what you're worth. And there are some cases where people's liabilities or companies' liabilities exceed their assets. And so they are really in a bankrupt position. They are they're in a negative position. And you don't want to be in that position where your liabilities exceed your assets. That's why it's important for you, to document, your assets. And sometimes a lot of us, we also lie about our assets so we could get a loan or get a credit card. And as a result, we find ourselves sometimes in a bankrupt position because our liabilities are more. And sometimes, situations happen in our lives, such as COVID-19, whereby you're unable to, make your payments, and the interest just keep accumulating, and so your liability end up getting higher. But if you could avoid that, that would be the first step. So the first thing about financial literacy is know your worth, know your assets, your liabilities. And if I were you, I would accumulate as much assets as possible. Now, in doing all of your financial literacy, sometimes we need to be very careful, because sometimes you have money in the bank, you forget about all the liabilities that you have, and you just go spend. You have a credit card, you just go spend the money without even thinking about the consequences. And so you need to prioritize your needs, and you need to question your behavior. Do I really need this? Is this necessary? Do I really need to keep up with the Joneses? Do I have to go to beauty salon every week? Can I afford to have my children in private schools? Do I need to have that particular car? Do I have to take a vacation this year? Do I need this big home or apartment? And these are some of the things that you need to question yourself whenever you decide what is it that you are going after. Another thing you need to be conscious of in terms of financial literacy is the income and your expenses. Now, income obviously is what you make as your gross salary. It's the rental income from your property. That also helps you in determining your financial position. Income is interest income you get from your investment. And then you have your expenses. Your expenses are the things that you do on a day-to-day activity, the things that you need on a day-to-day. For example, you need groceries. You have to pay rent. You have to pay utility bills. Those are expenses. And so this is another area you need to be very, very cautious and conscious of. Don't let your expenses exceed your income. Never let that happen. And it can happen if you're using a credit card. And so you must be able to control the money that you collect, and you probably could put it into different funds. You might have, different bank accounts, and you might have one fund for vacation, one fund for your expenses, but control it. Or transfer the money you need for your expenses into a debit card or credit card and just use that for your expenses. But do not allow yourself to be in a position whereby your expenses exceed your income. Otherwise, you're having a loss. Now, one of the key things in financial literacy, in order to control yourself, is having a budget. It's important for you to have a budget. The budget will determine, it's a tool that you need to discipline yourself, to control your spending habits, so you wouldn't go into that negative position. You don't go into bankrupt if you have this budget and you're following your budget. But even if you are in a negative position, still use the budget to try to get out of that negative position, to bring you back into a surplus. So don't panic if you find yourself in a negative position. A lot of us may find ourselves in that, especially now with what is happening. But it's not the end of the day. It's not the end. It will allow you to, I believe, bounce back. And so what is the budget? You hear budgets all the time. It's really to keep track of your finances. It's a guide or a plan on what you expect to receive and how you plan to spend it or save. In fact, some of you have $1,000. You know, if you're making $1,000 a month, I hope you're not, but if you are, or 2,000, whatever, you know, you have a budget, you say, well, I'm gonna put aside this for rent. You know you need rent. You know you need food, okay? So you will make sure cover the basic needs that you have in your budget and stick to it. I sort of covered this earlier. Why do you need a budget? To keep track of finances, to provide a form of discipline and control, to have a plan of excess funds, and to ensure you're able to meet your necessities. And I believe that individuals and companies should have a budget. And sometimes we go ahead and we expend money on things, and we don't, realize until it's too late. Oh my God, I forgot about this. I forgot I had this bill. I forget I had this. And the budget will allow you to keep in track on your spending limits. So how do you create a budget? Record everything you spend, keep track of your spending for the past 2 years, determine the necessities, budget only for that, and you set your goals. You don't need a specific budget tool to develop a budget. You can use Excel, use paper, whatever you use. The important thing is you must have a budget. That's a key ingredient for you to be successful and to be smart in managing your finances. And that's what we say financial literacy is, managing your finances. And one way to do so is to develop a budget. And some of the tips, you be rigid, you stick to your budget, review your budget on a daily basis, especially if you're just starting out. Always having a budget and an element of savings. You must be able to control yourself, spend only what you need. You're gonna see a lot of people doing a lot of marketing stuff. Don't worry about them. You know what your budget is, don't do it. You need to be smart. You need to be smart. Don't worry about what people say about you. Don't worry about people say what you're wearing, what you're eating. That's none of their business. That's your business. You know your financial condition. Nobody else knows your financial condition. You don't need to please anybody. So be content with what you have. Now, of course, I don't mean if you're poor, be content. What I'm saying is don't go above your means, okay? You know the position you're in. Be content in that position until you get better. Don't compare yourself with others and don't try to acquire the same things they did. You don't know how to acquire it. Don't live above your means and discontinue using the credit card. These are the tips that you need to make sure that you are successfully and effectively managing your finances. This is a budget guideline. This is the final slide. This is a budget guideline for some of you. If you don't know how to start and where to start your budget, it's just a guideline. This is particularly for persons who are struggling, who are in a bad position, who needs to bounce back. So if you have your budget, 36% you allocate to housing, 14% on food, 14% on auto, 4% on insurance, 4% on debt repayment, 4% entertainment. You should still go out and entertain yourself. 4% on clothing. You should still put something on savings, medical, dental, miscellaneous, and school child care, 8%. That basically is your budget. And if you use this as a guideline, I personally believe, from my experiences, that you'll be able to become financially literate. Have a wonderful day.